I think equally at fault is the expectation of buyers and perhaps also the lack of due diligence many investors of properties during the post-COVID era to do some serious homework about what they were going to buy into. I mean, after all, if you're going to look at reviews to purchase a handbag or a camera or even a car, why wouldn't you do so before you're about to buy a really expensive property? Hi again, welcome to the next episode of the Bali Business Review. My name is Jing and I'm here in California once again. This week I've been going out to explore the campuses of Google, of Meta, the parent company behind Facebook, Instagram, WhatsApp, and also revisiting the old office and headquarters of Airbnb, where I served as the Indonesian market manager in 2013. So through, let's say, an exploration of the roots of where I think a lot of the technological and AI movements will happen across these major platforms, and also gaining insights from the way that those who are, let's say, in strategic control of popular platforms that we work on, such as the online travel agencies, the popular social media sites, and also our communication tools that we use on a day-to-day basis. I hope to bring advanced insights that are predictive of what the future might hold so that investors who are looking for how to get ahead of the curve and how to survive a price war and how to get through and make the best decisions with the marketplace failing as we speak, to be able to use these insights to make more healthy decisions about how they're going to perform. Now, let's go back into history and examine some of the potential problems that we have gotten to at this stage, and we'll go over each of these in detail. Now, in my previous episode where I spoke about market failure and whether or not 2026 was a good time to enter the Bali real estate market, I neglected to actually speak about the two past market failures that happened around the 2010s. So let's get into that particular topic at this moment. So what happened in 2010 in Bali was that the freehold land and property market started becoming very explosive. Most of the fuel to drive these, let's say, speculative increases in the price of land and properties came from, I guess, the innovation of a few things. The first thing was the nominee structured agreement for buying freehold property. Now, in Indonesia, foreigners are not allowed to own land, and this dates back to probably a shadow of Indonesia's colonial past history, where, say, once you've been a colony, you probably don't trust foreigners to take possession of your land again after you've earned it through so much fighting to gain independence. So, in the spirit of the law, foreigners are not supposed to own freehold land or property in Indonesia, and Bali being part of Indonesia applies. So therefore, the innovation made at the time was that some clever lawyers and notaries decided that they would use a series of power of attorney agreements and also mortgage agreements to circumvent the spirit of the law by basically allowing for a local Indonesian nominee to serve as the official title bearer while surrendering all of their powers to rent, sell, lease, and use that land or property to a foreigner. So the power of attorney agreements relieved and created sort of a loophole that allowed for many foreigners to acquire freehold land. Now, that was generally also backed with a mortgage agreement that guaranteed that so-called nominee couldn't get clever and take their land certificate to a bank to gain a loan through use of the property as collateral. At that point in Bali's history, most of the buyers were people who were doing very well in the financial industry. In the 2000s, there seemed to be quite a lot of money to be made in Singapore, Hong Kong, and a lot of the Asian financial markets. So we would see regular appearances of managing directors from major hedge funds and investment banks to come to Bali on winter holidays and purchase a nice property in a complex. Many complexes in Bali of, let's say, 15 to 20, these micro-resort type communities of villa villages were abundant in Seminyak and in parts of Jimbaran and were the main go-to reason why the freehold market started explosive growth. The media industry at the time, which was mainly based on printed ads and magazines, also abundant lifestyle narratives to buy dreamy properties in Bali. And I know this fairly well because I worked as a real estate agent during this time. My primary job was to be, well, an unpaid tour guide to bring prospective property buyers around to see land and villas and whatever objects they wanted to buy. So over time, what would happen is that because prices were, and transaction prices of properties were no longer clear, and the wisdom in many particular agencies was to raise prices instead of lower them in order to make up for lost sales for previous quarters, this resulted in an untethering of prices, which eventually led to prices that were so high that there were no longer any more buyers who would reasonably want to transact properties. I particularly remember taking a managing director of Macquarie Bank from Australia, and he couldn't even figure out how the prices worked in Bali. Well, hopefully if you're watching right now, this episode explains what you were experiencing almost 15, 20 years ago. Okay, so that explains the market failure situation in freehold property in Bali. But what about the corresponding market failure situation in Jakarta at the time? So in around the same period in Jakarta, and due to the same user demographic. Now, the user demographic that was the primary buyers of properties of freehold status in Indonesia, in Bali, or in Lombok, were mainly expats. Financially wealthy expats had been recruited to work in multinational corporations, given enormous salaries and enormous bonuses to develop, I guess, the economies of many developing countries in Asia. These expats were abundant in Singapore, Jakarta, Shanghai, Hong Kong, Kuala Lumpur, along with, of course, the Australian expats coming from Sydney, Melbourne, and Perth. So, given that this particular demographic also worked in Jakarta, there was a bustling marketplace for apartments on long-term leases to expats with very generous, what was the word? Hardship packages for having to give up their comfortable surroundings and move to the congestion, pollution, and chaos that is our beloved Jakarta here in Indonesia. So at a certain point, the economics did not favor expats anymore, mainly because there was an increasing wave of young Indonesians who had studied abroad and were repatriating back to become part of the economic movement in Jakarta around the 2010s. Many of these Western-educated repatriates were willing to work for longer periods of time to develop a career, were not so sensitive to, I guess, financial crises or COVID because Indonesia was home. As a result, most of the apartments in lease in Jakarta no longer had any more customers. Strangely enough, a lot of the landlords, sensing panic again, go out to real estate agents and start demanding whatever price they can get, causing another cycle of despair and a tar pit by which each seller then adds more confusion and chaos to an already impractical, improbable marketplace where prices are not attached to reality. Over time, as the demand pool shrank and the supply pool started asking for higher and higher prices, this led to, well, I guess the entire collapse of the luxury apartment rental in major parts of Jakarta that are close to business centers. These days, Jakarta probably has seen a resurgence in Chinese national expats coming in to reverse that trend. Okay, so that being said, we caught up on some market failure that have happened in the past. Let's talk about what's happening today, which is about the investor mindset. So many a time this week, I've been hearing complaints from our own property partners about why prices are so low and can we set pricing floors? And the real endurance of, let's say, being able to survive a market failure and a price war is to adopt the correct posture of patience and understand your own strategic position relative to that of the marketplace. I'll illustrate three categories of investors and what they should probably do in order to survive a very competitive pricing war. The first category of investor is somebody who has already purchased a freehold property pre-2010. Now that is before all this, let's say, unanchored pricing has happened. So you probably got a pretty good deal at that point. What it means also as a investor who got in at a really, really good floor rate is that your cost of time on your property is far, far less than anybody else. So that means ultimately, as a freehold property investor from before the 2010s, before the pricing bubble, before the freehold market failure, you are effectively getting almost an infinite return on investment for your time. Your time is not constrained by the end of a leasehold term. Your time is also fully competitive to be able to challenge anybody who is more desperate to actually sell based on lock-in rates at the end of their lease. Number two, if you're an early leasehold investor before, let's say, the third year after COVID, that would be sometime in the 2022s to 2024s, you are also probably in luck. As long as you have, let's say, locked in a favorable lease rate, if you have built your property firsthand and not bought it from a developer or not bought it secondhand, you are also in a privileged position as well. The main reason is because you got your time in at the second best rates. Your rates are before there was developer margin, before there were expectations of untethered pricing due to the market failure effect that I spoke about earlier, and also your particular ability to gain value through a cheaper actual amortized cost of what your lease is worth per day allows you also to be competitive in a condition of a pricing war. Now, if you're the third type of investor and you recently bought a property within the last year or two, that is probably the most painful position, and that requires some deep, deep introspection and entrepreneurship in order to survive. In that position, your only chance at being able to, let's say, compete with the first two investors that have a much more comfortable position because they have not as much urgency to sell as you do, is the only way out seems to be to go further in or evacuate as quickly as possible. What do I mean by that? So every particular property is an opportunity to distinguish itself through two things: through its ranking in terms of how it competes in an open marketplace on, let's say, travel platforms, social media, or any other particular public market space where you can gain attention. That requires a commitment to perfecting the guest experience. If you can accumulate more 5-star reviews at a faster pace than somebody else, then over time, then you have a better chance at beating them in the marketplace and steering away some of the, let's say, guests and future guests, and some of that brand energy can go towards you during a downturn. If this is not, let's say, your type of thing and you were thinking about buying an investment property casually, either go back to your developer and find a way to get a refund, don't continue paying on any payments or installments, and cut your losses short before you sink more into what is a sunken cost fallacy. Okay, this is pretty much the end of this particular update. In future episodes, I'll be giving tips on how investors can take the right mindset and approach to gain advantages and strategic ground during a market downturn. I'm sure there's going to be a lot of innovation that will probably be started with those who are, let's say, more clever on using the latest tools and options available. And I'll be happy to answer questions if you do have any questions. I really do actually enjoy the comment thread below as a means of also making sure that I do have my facts right. Sometimes it's a very quiet room in the comment section, so if you do have counterfactuals or, let's say, things that prove I'm wrong, I welcome any open and healthy debate in the interest of making Bali, once again, a more transparent, more sustainable marketplace in accordance to Balinese principles such as Tri Hita Karana. Om Santi 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 Om.